then that goes back
with
to
the insurance.
I hate it when people talk about their worth and they talk about their primary residences. Oh, I'm worth this. My house is worth $1 million.
Yeah, it's like you can't
So your house is worth $1 million, but you have no other assets out of your primary house.
Yeah.
You're full because everybody has to live somewhere, and you're now just beholden to that
It's
one
almost
asset.
like you can't take that off the table.
Correct. Because you're right. Your house, it's not an asset.
No.
It is a liability because you have to live somewhere. Good morning.
Good morning. Welcome back to Expandable.
Yeah, welcome. All right. Here's one that I'm going to lead that I was thinking about, Lee. And I think this one does kind of come from, the world of being in banking, because the thing that always hits bankers is risk.
Yeah.
That's coming at us at...
That's like the first thing you have to look at.
Correct. And every angle and every people have that. And I remember early on in my career when I had like my first kind of examination from federal regulators. And, in the banking world, I don't know how much people understand like who regulates them and who's insurance and what is understand.
Yeah.
But a quick little synopsis. So, my charter's headquartered at the state of Florida. And insured by the FDIC, the Federal Deposit Insurance Corporation.
Yep.
So both of them audit us.
Yep.
When you're in good standing, one will come in, do a full audit. Then every 18 months, the other organization will come in and audit you. So they have to within 18 months when you're in good standing.
Yeah.
And usually that audit can last maybe on site 2 to 3 weeks. But, you've got 4 weeks. You're gathering documentation months ahead of time for them to review, to prepare, so they can think of their questions when they come in and kind of tailor it to the institution, because every institution is a little bit unique. And then upon that, you get other reviews, compliance reviews. We've got one coming up here this summer, which I think has been 5 years since we had that review, and then we have our internal audits. But they always ask, and when you start a new product, what's your risk assessment? And really a risk assessment is... what's the worst things that could happen in each situation, and can you mitigate that risk? Same thing. And then as you're ongoing, banks, we always look at quarterly. What happens in rate shock scenario? Rates go up 400 basis points. So we have to look at quarterly. So banks should have been prepared for the rate shocks anyways.
Yeah.
And I know bankers always think, things are really going to go up 4 points in 1 year. So we would do that static. We call it 400 basis points, or that equals 4%.
Yeah.
So, your rates went up 4%. Then what do your bonds look like? Okay, well, if you bought your bonds at that rate environment, now they went up 4% from 4 to 8. Okay, clearly your bonds are going to be underwater if you were going to liquidate them at that time.
Yeah.
So how bad do I have this? So we go through those scenarios all the time. So I want to carry that forward over to businesses and how they need to always look at the worst case scenario in all aspects of their business. And it's not like, and I think people are afraid of doing that because they think that I'm being negative. No, it's not being, it's that you can handle the worst case. So this would be for businesses that are already established.
It's those that want to fortify for the future.
You want to fortify. And I think you need to get in there, and as simple as maybe it is a smaller business that they're running everything through their, home PC.
Yeah.
Okay, great. Well, then take an inventory. All right, your PC's 5 years old. What's the worst? If that PC just stopped working right then and there, how bad would that impact you?
Right.
Just run that scenario through your head.
How long would you be offline?
How bad would that impact you? And, and you could logically say, okay, well, then I could not do this call. I could not do this. I wouldn't know this. It'd probably impact me $3,000. Okay, well, how quickly? In time. So how quickly would it be if you had a new computer and things are doing? Oh, well, CPU I could just get. I don't need a new monitor. I could have a sync. Maybe $500. So, okay, great. Maybe that's the time you go ahead and spend that $500 and you have a backup.
Yeah.
I don't know. I think that would be the simplest thing for small business.
Or you plan out in the future. Let's say your PC is 5 years old and they run 10 years. Maybe at the 8th year you buy a backup.
Correct.
So you have a plan.
Yeah. So you have that, or at least jot, okay, I know a computer. Yes, I can go down to the local computer store, get it set up, At least you know. But then you need to carry that forward all the way to, your suppliers, your top supplier. You could have a wonderful relationship for them for 10 years.
Yeah.
And what are the odds of them going under? Probably pretty slim. But what are the odds of them having a change of management?
Yeah.
Higher.
Much higher, yeah.
That change of management could say something and dictate and change the terms of the relationship. And maybe you were friends with the previous owner and you guys had a verbal contract and things went well and you guys just handled it. He sold the company and now the new person's coming in. Now prices went up. What are you going to do?
Yeah.
You know, how would that impact your business? Are you beholden? Would your business go under because of that? Run through those scenarios, you know. So at anything, if it completely wiped away, figure out a way how you're going to be okay.
Yeah.
So what are your thoughts? What do you think?
No, I think that's great. I think looking at each aspect of your business, like you're saying, starting with the simple things like technology and equipment, and it depends on the business you're in. If you're in manufacturing and you have a warehouse and you have, safety regulations, like there's lots of things to think about. But I think it's definitely prudent to look at each one of them. And maybe even if you don't have the time and someone has some extra time, put them and task them with this.
Yeah.
And going back to our ChatGPT conversations, get on ChatGPT and say, hey, I want to fortify operations for the next 5 years and, start to put some things in place. What are the key areas? And in three seconds, you'll have a lot of things to go work on.
Yeah.
Give it to that person, have them come back with some ideas. Think about the worst case scenario. That's not as hard as thinking forward and having a vision about something, which really requires you, the owner, or someone close to you. Other people can look at things and say, well, what was the worst thing that would happen if it went here? And then present it to you and you say, well, yeah, but you didn't consider this or this. There you go. Now you have your plan.
Yep. And going back to previous episodes, some of the worst case, well, if you have a commercial loan, rate shocks. That goes up in 5 years, that rates. How are you going to be able to handle that change?
Yeah.
You need to build into that too.
Yeah.
You've got X amount of 5 years. I was in at 6. Now the rate changes at 9. Can you afford it? What are you going to do?
And what's it actually look like? Because instead of being surprised by things, know what that is, plan for it, forecast for it, and you'll be in a good spot.
Yeah, because I know everybody in the households throughout Florida, nobody planned for the monstrous increase in homeowners insurance.
Oh my gosh.
Tackled with car insurance, just doubled and tripled for a lot of companies. It did for myself.
Yeah, for us too. It's horrible.
And so
it's funny. We were just talking about that the other day and saying, looking at our amortization of our mortgage and saying when it'll pay off. And we're like, okay, well, what would happen if we put an extra $100 to $200 per payment towards principal, and would it pay off dramatically early, or is it worth it? Because we have a really low interest rate. And we're looking at all that. I was like, we're not really, we're saving half of our payment when we pay it off every month. But when you look at it, it's like, you think like our mortgage is like $2,200 or something like that, like all in. But when you look at what you're paying on taxes and insurance alone,
I think that's
I'm like, what's the point of paying this thing off? Like, I'll just let it ride, because am I going to invest more in paying it off now? Because I'm not,
especially if you got a lower rate,
month.
Because ours is in the 2% because we refied on a 15-year fixed, in the 2% range.
Yeah, it doesn't make any sense.
4 or 5 years ago. But same thing. I think half of our payment, the 60% of it, is property tax and insurance.
Yep.
And I'm grandfathered in this old property tax too, lease for primary residence. So that property tax is only going up 3% a year to 5% max by law.
Exactly, to the point of this conversation is that, like, in my head, in both of our heads so far, we thought, oh, when we pay off our house, we get back $2,200 a month.
No, you don't.
And then we won't our budget increases because our payments go down.
You're always going to be renting your house from the municipality. Yeah.
I'm like,
the local municipalities.
We're saving half the payment, but effectively we're not saving anything. You will enjoy a little bit of a savings, but you basically still are paying for a house.
So, and then that goes back
with
to
the insurance.
I hate it when people talk about their worth and they talk about their primary residences. Oh, I'm worth this. My house is worth $1 million.
Yeah, it's like, you can't.
So your house is worth $1 million, but you have no other assets out of your primary house.
Yeah,
you're full because everybody has to live somewhere, and you're now just beholden to that.
It's
one
almost
asset.
like you can't take that off the table.
Correct. Because you're right. Your house, it's not an asset.
No,
it is a liability because you have to live somewhere. Great, you have equity into it. You shouldn't really tap in your house equity over time.
It's an asset for the next generation, because they don't have to live there, so they can rent it or sell it. And that's
because they have their own liability.
But until you die, it's still a liability.
Yes.
And that's what I'm finding is this whole idea of paying off your mortgage. I think
it is.
It's
now,
great.
But if you're at 6-7%, then
it's great
pay it off.
I mean, either way, money, it's great paying it off. Debt and having no debt on your home is a peace of mind. But I'm just realizing it's a lot less of a peace of mind.
Yeah, you're thinking at $2,200, you're like, okay, I paid it off. I'm still going to be paying $1,000 for property tax and insurance.
Yeah.
But you can self-insure at that point because then you're not required to have insurance on your home.
Really?
Oh, yeah.
I mean,
that's what dictates to your primary residence to have an insurance.
But you'd have to, I'd have to run the numbers on the assets you'd have to pull from to insure yourself.
Well, then your risk is liability, slip and falls, hurricanes, tornadoes.
Well, that stuff, but I'm saying just for hurricanes and the stuff that like a tree comes through your house, the major things.
You can take care of that by getting rid of the trees that have fallen near it.
Yeah, right. I'm saying you can mitigate and all that, but I think you'd have to. Okay, let's say I'm paying $500 a month for insurance. Well, $500 every month for how many months is not going to self-insure me, right? I'd have to have other assets to pull from to immediately.
Yeah, in that case, you have to look at. Yeah,
but that's good to know. I didn't know that.
Same thing with car insurance. You can self-insure car insurance too. In the state of Florida, you got to prove your assets, but that is one that I personally wouldn't consider because
it's more
that's your liability.
It's more difficult because of someone hitting
we're in a no-fault state too.
Yeah.
So, you're able to pay even though it's not your fault, which is absolutely ridiculous. Your insurance, but you don't have insurance, you go after them. But that's one I wouldn't. But
these are not. That specifically is not one that I'm willing to try to cut on. If I'm looking to cut costs because of the it's just.
But the homeowner's insurance costs with that rise, that is one they're going to cut because depending on your house. I mean, how much your house is 40, 50 years old.
Yeah.
So how many hurricanes has it gone through?
Yeah. Well, it's a block house.
Yeah. So I got no eaves for the hurricane to rip off my house. Right. It would take the tornado to run through it.
It would take a major thing for it to be costly for me.
Yeah.
And it does. I think that at some point, the idea of self-insurance does make sense for the house I'm in because we're way up where there's no flood. It'd have to be like every house would be underwater for us to flood. Yeah. Things like that.
Or maybe, and I haven't looked into it because I still got a mortgage, but liability as far as can I just get a fire coverage? Can I just get this? I just want a liability for somebody for
these type of things
that happens to be walking and breaks their leg and says they were in my property.
Yeah. Or a candle burns it down. Yeah.
Well, that's bad hair quality. Can't do candles anymore.
Oh, is it?
Horrible hair quality.
I didn't get that memo.
Yeah.
But no, this is good. I think we kind of digress a little bit, but to the personal side, but to the business, I mean,
it's still the same. Look at the worst case. Can you handle it? You can self-insure if you can handle the worst case scenario.
Yes. Yeah. And as an additional, practical wisdom is I think you kind of should run your household like you run your business. If you're running your business well, you should really, those things should be kind of mirrored because you're thinking about risk in your personal life. If you're doing that well, then just transfer that to your business. Or if you're doing it well in your business, transfer it to your personal. And there's going to be a gain there somewhere.
Yeah.
And then you get to pay taxes on that gain.
Yeah. And, it keeps going up and up. I think they want to increase, capital gains, which I go back and forth. Should they increase capital gains tax the size of ordinary income? But I don't know because I think the capital gains is such a few one time, like that's the American dream. You saved up enough to buy something and then you resold it at a higher value.
Yeah.
And a lot of families, that may be the one time, 2 times in their livelihood to set them up for having assets for retirement and to be out. But no, we're going to tax you even harder for that because you went over that threshold that 1 year of your existence of income. I don't know. I go back and forth.
Yeah. All right. On to the next one.
Bye.